Alright, welcome back here 11s. I just quickly want to do two questions with you just to show you how you're going to approach these questions. So the first question is the first question of your chapter 21 exercises. I'll put the page number on the post page. I can't remember the page number. Now, what the first question here is, what you have to do is classify the following items under the three classifications used in cash flow statement. If you don't think an item should be reported in cash flow statement, state non-cash item for the irrelevant items. Okay, so I've got these items here. I need to classify them into the operating, investing or financing activities. If it doesn't fall under the category of cash flow statement, I'm just going to write that as non-cash item. Okay, now the first transaction here is cash purchases of inventory. Okay, so when it says cash purchases of inventory, it is my operating activity. It is going to be a part of my cash flow statement. Okay, credit purchases of inventory. So credit purchases of inventory is your non-cash item because you're not paying any cash at the moment. Okay, so it is your credit purchase, not a part of your cash flow statement. Okay, cartage inwards paid, again this is an operating activity. It is a cash flow, so when you made the payment, it is going to be a part of your operating activity. Okay, repayment of loan, again cash is flowing out, so loan is our financing activity, so my answer is going to be financing activities. Okay, GST collected from on cash sales. So GST collected on cash sales, again it is an inflow of my business. It is a part of my operating activity. Okay, withdrawal of inventory by the owner. So as I said, withdrawal of inventory is not cash inflow or outflow. It is a non-cash item. Okay, cash sale of inventory, again this is my operating activity because the cash is coming into my business. Okay, cash purchase of office furniture, again non-current asset. It is my investing activity, so cash it is going to be a part of my investing activity. It's not a non-cash item, so yes, it will be a part of my cash flow statement. Okay, capital contribution by owner, again when the owner puts in money into the business, that is the financing activity. Cash is coming into your business, so it is, yes, a part of your cash flow statement. Okay, credit sale of inventory, again when we are selling something on credit, it is a non-cash item, so it is not going to be a part of your cash flow statement. Okay, withdrawal of cash by the owner, again if he is withdrawing cash, that is again your financing activity, but that is your cash outflow. Okay, GST paid on cash purchases, again this is your operating activity. You have paid the cash, so it is going to be your expense. Okay, again inventory loss, so it is a non-cash item because inventory loss is not something you've lost in cash. Discount expense, again this is the non-cash item as well. Okay, all right, now I hope this makes sense. If you have any questions, please let me know. Pretty easy question to do. Let's go on to question number 3 as well. If you want to pause the video here, just pause it here and write the answers to these questions, and come back and watch the next question. Okay, I'm going to keep going. All right, now my next question here is, okay, so what I'm going to do is, sorry, I need to bring that in the window. Yeah, there we go. Now my third question here is, Christine Shannon owns Shannon's Jeans. She has extracted the following information from the financial records of the shop: cash sales, credit sales, collections from accounts receivable, GST receipts. So these are all the transactions. What you have to do is select the relevant items from the above list and calculate the net cash provided by the operating activities. Okay, so this is we are just going to do operating activities. This is how my performer is going to look like. So let's look at first item, cash sales. Yes, it is operating activity. This is my positive balance, $112,000. Credit sales is a non-cash item. Collections from accounts receivable, yes, accounts receivable, $15,000. GST receipts, again, yes, it is my cash inflow, so GST receipts $11,200. Okay, cost of sales is never a part of operating cash flow statement because this is just the cost of my sales. There's no cash involved in this. Cash purchases of inventory, again, when I'm purchasing, I'm making the payment. So Excel doesn't let me do the bracket, so I've just put that as minus here. Okay, sales returns by accounts receivable, again, sales returns by accounts receivable. So accounts receivable is something we haven't received the money from, so it is my non-cash item for now. Okay, payments for accounts payable, again, $32,000, again, money is going out. Wages $34,600, money is going out again. Cartage inwards, again, money is flowing out of the business. GST payments, again, money is flowing out of the business. Okay, so these are my inflows and these are my outflows here, right? So I've added all the inflows together, $138,000, $138,200, and my cash outflows total, adding all of these together, these four, I get this $93,200. Okay, I'm going to subtract $138,000, and I'm going to subtract, I'm going to just say it minus, oh yeah, that's the reason I couldn't do it. Alright, oh yeah, let's keep it like that. I can't put the minus sign here in here. There's something wrong with my Excel. So $138,200 minus 93,220, and this is my net cash provided by operating activities. Okay, so this is the answer to this question. Now second and third part, I'll display the answer sheet here so you can see what is going on. So okay, I was doing this question, third question there, I forgot which question I was doing. Now second part is explain your treatment of the items, credit sales and sales returns. So credit sales and sales returns do not involve the transfer of cash, so they are not included in the calculation. They are non-cash items. Okay. Would you expect net cash flows from operating activities to be a positive or a negative figure? Am I being recorded? Looks like I am. Alright, so businesses generally sell inventory for more than they purchase it, so cash flows sales should be greater than cash flows used to purchase inventory. The markup applied should be sufficient to cover the expenses. Okay, so this is how you're going to answer the question. If you have any questions after this, please let me know. Okay, just trying to see where my screen has gone. This is all for today, guys. Have a good day and let me know if you need any help with anything. I'll try and respond to your questions ASAP. Have a good day. Bye-bye.